to Byte-Sized Tech, where we blend casual conversations with insightful discussions on the latest in technology and gadgets.
Great to be diving in.
We've got a really interesting mix today. We're going to touch on where your next phone might actually be built, how Europe's navigating the whole big tech scene, the unbelievable infrastructure powering AI.
The engine room based.
Exactly. And finally, how investing is getting, social. So yeah, let's get started.
Sounds good. It's definitely a snapshot of some major currents in tech right now.
For sure. Okay, first up, iPhones. So the word on the street is former President Trump had a chat with Tim Cook, Apple's CEO,
Right.
and sort of suggested maybe, possibly, bring iPhone making back from India to the U.S.
Yes. That conversation, it fits a pattern, doesn't it?
It really does. And it comes just as Apple's really leaning into India. I mean, for pretty obvious reasons.
Yeah, avoiding tariffs, the whole China geopolitical situation. India looks like a safer bet for some of that production.
Totally. And Mark Gurman over at Bloomberg, he's saying about a third of iPhones for the U.S. are already made there.
A third already? Wow.
Yeah, and the plan is apparently to get that to the vast majority by the end of 2026. It's a big shift.
That is a significant diversification. Reducing reliance on China makes a lot of sense strategically.
But then Gurman kind of drops a reality bomb.
Oh.
He basically says making iPhones stateside at any real scale, impossible. That's his word.
Impossible. Strong word. Why, though?
Well, he lists a few things. Engineering talent, the specific manufacturing skills needed, just finding the physical space.
The whole ecosystem.
Exactly. And the cost, it'd be way more expensive. Just shows how specialized these supply chains have become, you know?
It really does. You can't just flip a switch and replicate decades of infrastructure and expertise somewhere else, especially for complex electronics.
And, you see this in the context of Trump's push for U.S. manufacturing. He's done this before, right? Publicly nudging tech companies.
Oh, absolutely. Remember the SoftBank talk? And wasn't there something called Stargate? It's a known tactic.
Yeah, and Apple has invested here, like that $500 million. But that's more for chips, AI research.
Right, the high-value R&D stuff, not the actual assembly lines for the phones.
It's like build the brains here, assemble the body elsewhere. That seems to be the model.
It highlights that tension, doesn't it? Political goals versus the hard economic and logistical facts of global manufacturing.
Definitely. Okay, so speaking of global players and different rules, let's hop over to Europe.
The EU regulatory landscape. Always interesting.
Yeah, so Henna Verkunen, she's the EC Vice President for Tech, Security, and Democracy. Quite a title.
Quite a portfolio.
She's been meeting with Tim Cook, Sundar Pichai from Google, basically rolling out the welcome mat.
The EU pitch, right?
Yeah.
Come invest here. We're stable, predictable, great talent, especially for AI.
Exactly. They're trying to woo them. But, you also hear the grumbles from some big tech execs.
That it's too tough. Draconian even.
Those are the words apparently being used, yeah. Mark Zuckerberg's been lobbying against some of it. But Verkunen pushes back. Says the goal is, a fair, safe, democratic digital space, no monopolies, fair competition.
It's a different philosophy. More proactive regulation compared to the U.S. Often, they want guardrails.
And they're serious about platforms cleaning up their illegal content, protecting minors. That's partly why they're looking into TikTok's ad system, the lack of transparency there.
Right, the responsibility of the big platforms.
It's like, you're welcome here, but these are the house rules.
And they back it up with enforcement.
They do. There's recent fines, $500 million for Apple, $200 million for Meta.
Ouch. For not complying with the Digital Markets Act, the DMA.
Yeah, the DMA, their rule book for the big gatekeeper companies. Keep things competitive.
So when people ask if they're going soft on fines because of, say, tariff talks?
Verkunen says no, basically. The main aim is compliance, and they prefer getting there through dialogue, ongoing talks.
Makes sense. Compliance over punishment, ideally.
And they're still working on the AI Act's Code of Practice, trying to make it workable for businesses, innovation-friendly, but still responsible. It's a balancing act.
Very delicate one, especially with AI moving so fast.
All right, let's completely switch gears. Let's talk about the engine under the hood of all this AI stuff.
The infrastructure. CoreWeave.
Yes. Their CEO, Michael Intrater, just did their first public earnings call, and the demand, he called it insatiable.
Not surprising, given the AI gold rush. Everyone needs the computing power.
Their revenue growth was something like 400%. Just Wow.
That's explosive growth. Shows you where the money's flowing in AI right now.
Now, investors apparently blinked a bit at their spending plans, capital expenditure, going up to $23 billion. That's a lot.
A very lot, $23 billion.
But InTrader's explanation was, look, this isn't just random spending. It's tied to signed deals, actual customer demand.
So they're building it because customers have already committed to paying for it. Less speculative.
That's the argument. What I found really interesting was his point about inference versus training.
Yeah. The two sides of the AI compute coin.
Right. Training is building the models, super compute heavy. Inference is using them in the real world.
Making predictions, generating text or images, that sort of thing.
And InTrader says the big trend, the most important trend, is the growing speed and volume of inference. Because that's
where the value gets realized, right? Where AI actually does stuff for businesses and users.
Yeah.
Monetization.
Exactly. It's moving from the lab to the street. He used the cat analogy. Training teaches it what a cat is. Inference spots your cat.
Good analogy. It shows AI is becoming operational, not just developmental.
And he also pushed back on the idea that CoreWeave is just like renting out GPUs.
We're more than just hardware.
Right. He stressed their integrated software solution makes the hardware perform way better. They bought weights and biases, for instance.
The MLOps platform. Yeah, that is a crucial software layer for developers.
Yeah.
It's about the whole stack, not just the chips.
It's the engine and the performance tuning, basically.
A much stickier business model if they pull it off.
Okay, last stop on our tech tour today. Social investing and eToro.
Right. They finally went public after, 18 years?
18 years. Yeah, CEO Ioannisio was talking about it. They build themselves as the world's largest social investment network.
Trading stocks, crypto?
Yeah.
The whole shebang.
Yeah, stocks from over 20 markets, tons of crypto assets. And their big hook is copy trading.
Where you can just automatically mimic what successful traders on the platform are doing.
Exactly. Sounds tempting, maybe a bit dangerous, I don't know.
It definitely lowers the barrier to entry, but yeah, carries risks like any investing.
Apparently the mix of stock versus crypto trading on there really swings with whatever the market's doing at the moment.
Makes sense. People chase the hot asset class.
Now, compared to Robinhood, eToro's market cap is smaller. Ozzy's plan to catch up.
Let me guess. Tapping into the next generation.
Bingo. He called it the largest generational transformation of wealth in history, targeting younger, digital native investors.
That intergenerational wealth transfer is a huge potential market for platforms like eToro and Robinhood.
But they're not just copy trading or DIY. They also offer managed portfolios, smart portfolios run by their own team.
Trying to offer a spectrum of services, from active trading to more passive options.
And crucially, they shifted strategy away from just growth at all costs
to profitable growth, a common theme for tech companies heading to public markets.
Yeah, they reported over $300 million in adjusted profit. Makes them look much more solid, more ready for prime time as a public company.
Absolutely. Profitability matters a lot more in the public sphere than just user numbers sometimes. Shows sustainability.
Wow, okay. We covered a lot of ground there, from iPhones possibly shifting manufacturing
to the EU's regulatory approach with big tech.
The incredible boom in AI infrastructure with CoreWeave.
And finally, eToro bringing social investing to the public market.
It's quite a tech landscape right now. So much is shifting.
Definitely dynamic. Lots of interconnected pieces moving.
So, thinking about all this.
Yeah.
What stands out to you? Does the idea of most U.S. iPhones coming from India feel significant?
It feels like a major geopolitical and supply chain realignment, yeah.
And the EU's rules necessary guardrails or innovation killers. It's the perennial question, isn't it?
Finding that balance is the key challenge for regulators everywhere.
And this whole social investing copy trading thing, is that the future or just a trend? Lots to think about.
These platforms are certainly changing how a generation approaches markets. The long-term impact is still unfolding.
Well, that's our deep dive for today. Thanks for tuning in to Byte-Sized Tech.
Hope you found it insightful.
If you enjoyed the episode, definitely like, comment, share it around, and please subscribe for more fun tech discussions.